Bollinger Bands and RSI are amongst the most popular technical indicators, and there are a number of strategies that focus on combining these two. But there is a common misconception about these indicators that they are only effective for trend reversal. Do you know that they can be just as effective for trend continuation? Here are the results that I got using a strategy that effectively utilized these two indicators for identifying trend continuation. Let's quickly review the strategy that we will use today. As usual, the first step of our strategy is that we will take trades only in the direction of the trend. There are a number of approaches to identify this. In simple words, price is said to be following a bullish trend when the price is making higher highs and higher lows. Conversely, the trend is bearish when this is showing lower highs and lower lows. Most trend indicators work best when used in the direction of trend. Therefore, for our strategy, we will follow the trend. But what if the price is moving sideways? This is when the price is moving within a very tight range, and we will avoid making any trades when we see price moving sideways. Now to the second step, which involves Bollinger Bands breakout. Bollinger Band is without doubt one of the most effective indicator. It consists of a center line, which is the simple moving average of 20 periods, while the outer bands cover an area of 2 standard deviations around the moving average. These are really effective in visually demonstrating price volatility. Our strategy relies heavily on Bollinger Band breakout. We will look for instances when price breaches the outer bands in the direction of trend. With this, we are assuming that Bollinger Band breakout is an outlier event and of significant importance. Therefore, following such an event, the price should continue to move in this direction instead of what we commonly hear as a sign of reversal. During such phases, price finds support from the moving average line and continues to move between the upper band and this line. Let's move to the third leg of our strategy. This is where RSI comes in. As you know that RSI is really effective in tracking momentum. The upper and lower bands indicate overbought and oversold levels respectively. The usual misconception is that as soon as the price hits these levels, it is primed for reversal. Whereas with experience, I have noticed that this indicates prevailing market sentiment at the point, and oftentimes price tends to continue moving in the direction of the trend. The default settings for RSI is 14, whereas for upper and lower bands are set at 70 and 30 RSI levels. We will make a change in these defaults because I am looking for a secondary signal. Remember, my primary signal is coming from Bollinger Bands, which is indicating volatility and price event breaking the boundary of my defined volatility. In this strategy, the RSI will indicate the build in momentum. For this, we will set the upper threshold to 60 and lower threshold to 40. This is how RSI will look with the change settings. While we will take the indication from the narrower range, the support will continue to be at the center line of RSI. Okay, now let's do a quick recap before we set up our trade. We will take trades only in the direction of trend. We will look at instances on Bollinger Bands where price will break the upper or lower band in the direction of the trend. Once we find such an instance, only then we will look at the RSI. Remember, we are using revised settings for 60 and 40 for the upper and lower bands. We will look for a signal where RSI will break out of the threshold in the direction of the trend. So now let's look at the trade setup itself. I will be using TradingView for testing this strategy. Let's first add Bollinger Bands to our price chart. We will now add the relative strength index. I will slightly adjust the colors of these indicators. Well, this is just a visual preference. But remember, we need to adjust the RSI settings to reflect the modified threshold we will use in our strategy. Okay, now we are all set to start the test run. Let's begin with identifying the current trend. While there are a number of advanced approaches that can be used for more rapid identification, we will use the most basic one just to make our point. We see a trend emerging, but it is in line with our trend? No, it is not. Therefore, let's see how this develops. After a bit of a bullish run, we again see bearish trend emerging. Therefore, while it may have given us a quick swing profit, however, we are trying to find a more robust results. Therefore, this one did not suit our strategy. Now we see some interesting development. An outlier on Bollinger Band in the direction of the trend and also supported by a signal on RSI. This meets our criteria. Seems like a good trade. However, the candles have breached the moving average line a few times, which is usually a sign of weakening movement. Therefore, we'll close this trade when we get a chance. Market is moving sideways. This is a good condition for upcoming breakout. We see a breakout with signs on Bollinger Bands and RSI. Let's pay attention to this trend. I will just call this one lucky as the market once again started moving sideways. Let's make profit and close the position. Seems like the momentum is primed for bearish run. So let's keep looking for signs of a bearish breakout on Bollinger Band. Here's another trade that we can open. I hope this gives you a fair idea of how to use this strategy. We will continue to make the trades using this strategy, and finally, here are the results from this strategy. I hope you like this video. Do remember to use caution when implementing any such strategy as there are a multiple of factors to be considered which can only be learned with. If you like this video, please give a thumbs up and subscribe to the channel.